This is Craig Haugard with your Financial Issues Ag Update. Well, corn prices struggled to an unchanged close yesterday amidst weather outlooks calling for more beneficial rains in the Midwest. And ideas, we have an awfully good-looking corn crop coming at us. The battle between large ending stocks and large Chinese purchases appears to be the issue at the moment. There's a fair amount of the corn crop that's going to be in the critical pollination stage this week, so weather is going to be crucial during this time period. Now, the weekly ethanol production report showed that weekly ethanol production had increased by 17,000 barrels per day over the previous week. Now, the year-to-date production is still running 10.2% below last year's levels. Stocks were down 12,000 barrels from the previous week, and right now we have our ethanol stocks at 12% below the same week a year ago. In the overnight trade, we have spot futures trading 3 cents higher. Beans benefited from more Chinese business and stronger than expected NOPA crush numbers. The USDA announced the sale of 389,000 metric tons of beans to China for the 2021 crop year. The USDA has now more than 3 times the normal market year commitments than it normally does with China. There were some rumors late in the session that China had booked an additional 5 cargoes of beans for that same 2021 year time period. The U.S. continues to be at a pretty significant discount to Brazil for soybeans delivered into China in the nearby time frame, so we should continue to see good Chinese soybean purchases. NOPA reported that its members crushed 167.3 million bushels last month, which is 5 million bushels more than the average trade guess, and 18.5 million bushels more than we were at a year ago. In the overnight trade, we have spot futures trading up 4 cents. The wheat market experienced a high volume day and a 20-plus cent rally in the Chicago futures. Kansas City and Minneapolis followed, but at a lesser rate in the rally. We did have more Chinese buying rumors yesterday, although no sales were announced. The tighter spring or soft red wheat supply and demand projections had some traders playing an intra-market spread in an attempt to ration soft red winter wheat demand against the hard red winter wheat. So I would look for that Chicago-Kansas City spread to remain pretty volatile. In the overnight trade, we have Chicago 3 cents lower as I record this, while Kansas City and Minneapolis are unchanged. Cotton futures continued their string of being lower every day this week. At the closing bell, December futures were down 50 points to settle at 62.13. In the overnight trade, we have spot futures down an additional 32 points. Livestock futures were mixed in yesterday's session. We had the October live cattle futures ending the session $1.45 higher. For September, feeder cattle were $2.07.5 higher at the closing bell. Lean hog futures, on the other hand, were slightly weaker, with the October futures closing down 25 cents. Class 3 milk futures had a rough session, with the August futures finishing down 75 points to finish at 22.34, and we're trading an additional 23 points lower in the overnight trade. Meat cutout values were mixed on Wednesday. Choice box beef was 16 cents lower to close at $200.76. Select boxes were up 52 cents as they settled at $191.37. Pork carcass cutout values were $2.71 higher to close at $68.95 per hundredweight. This has been Craig Haugard with your Financial Issues Ag Update. We'll be right back with more financial issues after this.